So, with the mortgage market and the economy in general changing so much this year, it's really hard to keep up with what's going on. So, for all the information you need to know, keep watching. Hey everyone, welcome back to the channel. My name is Adam, I'm an expert mortgage broker, and today I thought it would be useful to go over the new questions that keep coming up so far this year. With things changing all the time, we get new questions that are new trends that we need to keep up with and keep people informed about. So I've got some questions that I've taken from our advisors, questions that people are actually asking them at the moment, so I'm going to run through and see how we get on. There's quite a lot of information to go through, so grab a pen, take some notes, rewind, do whatever you need to do. There's quite a lot of info in here. I'll also put some links to some other videos on the channel. So always, if you find it useful, please give us a like, subscribe to the channel. It really helps us know what content you're enjoying and what we need to make more of. Okay, so let's get into it then. Can parents help me with my mortgage? Well, the answer is yes, they can. Depending what position they're in, the best way that parents can help is just with some extra deposit. Now, that might come in the form of just cash that they can give you. Who knows, you know, some people do have that luxury facility available. They may be able to remortgage their property or maybe another property that they own to get the cash. Either way, extra deposit is the best way to help you as a first-time buyer. Some people talk about guarantor mortgages. They do exist, they are a thing, but it's very hard to make a guarantor mortgage work. Your parent or your guarantor needs to be able to afford your mortgage on top of theirs and any other commitments and things they've got within the mortgage term that needs to fit with their retirement age. Or if we're going beyond their retirement, then we're only looking at their pension income. So it's hard to get that mortgage that you need in a short term, because parents are normally older, obviously, so we normally have less years to pay off the mortgage. So guarantors don't always work very well. Some lenders, I'm talking like, you know, one or two here and there, have certain other schemes where parents or family members might be able to put some money into an account with that lender. It's held for a little while and they can get it back later, like a family assist type mortgage. That's very, very rare. There's maybe one or two of those around, but that is an option as well. But the best way parents can help nowadays is just with some extra money. So we do that quite a lot, you know, remortgage other assets and things to give children a little bit extra deposit to put down. Okay, next up, how do I know what my credit score is? How do I know if I've got a good credit score? Well, I'm going to put a link in the description to a free service. It's a free trial for a service that you can use to check what your credit score is. And your credit score is, well, literally that is a score. Depends on the provider you go to, but it will be a score out of a certain amount, and that will dictate whether it's good or bad. Lenders don't always look at just the score though, so if your score is a little bit lower, don't worry, that doesn't matter. Your score is built up of several things. The biggest ones are missed and late payments, so if you've missed anything or been late paying anything in the last few years, that will be having a negative impact on your score. If everything's up to date though, it's going to be absolutely fine. Make sure you're on the electoral roll, the voters roll, that can really help your score. Make sure your address matches on all your bank accounts and your driving license and everything, so make sure everyone knows who you are and where you are and what accounts you've got, and that it all lines up. Okay, do I have to use my estate agent or my new build mortgage advisor? So when you go to an estate agent or you go and buy a new house, they'll try and get you to use their mortgage broker. Some are much worse than others. A lot of the corporate agents, you know, the big names, tend to do this more than others. Quick answer, basically, no, you absolutely don't. In fact, we see people all the time that say, oh, I'm pressured to use this broker because, you know, the estate agent says it'll be easier that way, it'll go through quicker, they're more likely to accept my offer. All of that's a load of rubbish. You absolutely can use whoever you like. Obviously it doesn't have to be us, we'd love it too, but it doesn't have to be us. You can use whichever mortgage broker you are most comfortable with, and that is the key. Use whoever you are most comfortable with. Which insurances should I take with my mortgage? Well, this is a whole different subject in itself. There's a few different options. It depends on your situation. If you are young, single, on your own, no children, you're going to need things that cover you and make sure that you can keep paying your mortgage and your bills if anything were to go wrong. So if you were ill or had an accident or became seriously ill, we'd want to make sure that the mortgage is paid for you each month. That's that situation, ranging right through to couple, married, children. We're going to want that as well. We're going to want to make sure your income is protected, but then we're also going to want to make sure that the mortgage can be paid off if you die, and all the other bills and things can be managed and carried on being paid after you die. If you leave family behind, we need to leave them mortgage free, and we need to leave some extra money there as well. None of it is you don't have to have any insurances at all, apart from buildings insurance. However, we really recommend that you have something in place. The last thing we want is a phone call to say, I can't pay my mortgage anymore because such and such has happened, someone has died, I've become ill, now I can't afford my mortgage anymore. Those calls don't happen very often on our watch, because all of our customers are nicely protected, but that's the worst thing we want to happen. So you don't have to have anything, but we recommend that you protect your income in some way and your life if you've got people to leave behind, if you've got children, dependents and things. What do I need to do before I start viewing properties? Well, this is a really common one. We need to do a couple of things. We need to check your affordability. That is the numero uno thing we need to do, the number one. We need to make sure that you're going to go and look at the right property. So we need to look at your income and your outgoing, your affordability, which we'll talk about a bit more in a second. We need to assess all of that. We need an agreement in principle. That's an AIP, as some people you will hear call it. That just basically means that, yeah, we've checked it all out, you're ready to go, and now you can go and look at some properties. Estate agents will want to see your agreement in principle sometimes. That means that you're good to go, basically. Generally, for our mortgage customers, we tend to be able to speak to the estate agent and things, let them know that you're good to go. But it's really important to check affordability and check you're going to go and look at the right properties. The worst thing that happens, we get this all the time, unfortunately, is, oh yeah, I've found a house, I've seen a house, had my offer accepted, and we look at the figures and we're like, oh God, sorry, you can't actually afford that one. So we don't want that. We want it the other way around. Check that first and then go and find a house. How long does your AIP last, your agreement in principle? Normally 3 months. There are some exceptions to that rule. There's always exceptions to the rule when you watch my videos, but generally speaking, it's 3 months. If nothing changes during that time and after that time anyway, generally speaking, you can assume that your agreement in principle will be okay if it needs refreshing. Just because you've got an agreement in principle though, and we've found this more and more lately, just because you've got one doesn't mean that when you do your full mortgage application, that will definitely be the same case, because the agreement in principle says, right, today we will lend you this money. If that lender changes their criteria, their affordability, their stress rate and all that sort of stuff, which they do and they have lately, if that changes between the day you get your agreement in principle and the day you want to do your full mortgage application, then we can be in trouble. So the agreement in principle is obviously necessary and we need one, but things can still change. So it's important, if you're talking to a mortgage broker, that you keep talking. If anything changes, you let them know, and then obviously you expect the same the other way around. So keep them updated of what properties you're looking at and what your situation is doing. Next up, what fees are involved? So there's a few basic fees on the list, might be 1 or 2 extras as well, try and cover as much as I can. So first up, we're going to have stamp duty. Now, if you're watching this as a first time buyer, you're not going to pay stamp duty up to £300,000. So it's a big chunk of property with no stamp duty to pay. Over that, then you start to pay a little bit of stamp duty. Once you get over 300, it does sort of soon mount up. So the more expensive your property gets, the more stamp duty you will pay. But if you're a first-time buyer, nothing up to the first 300. Then we're going to need a solicitor. Now, a solicitor is there to help you buy the property. They'll also do a little bit of work for the mortgage lender too, to make sure that the property you're buying is suitable for them. Buying your first property, I'd probably allow about £1,500, something like that. If you're selling a property as well, that's probably another £1,000 or so. So about £1,500 for your first property purchase. Now that's the two big fees. A few other little bits as well. We may need a valuation. So a lot of the time the lender pays for this themselves actually, but now and then some lenders don't. So sometimes we need to pay for a valuation on the property. It's only a few £100s. If you want a more detailed survey on the property, depending on what you're buying, and if you're buying a brand new one, obviously you won't need that. If you're buying something older, you might want a survey to check the property's structure and how it's built and what sort of condition it's in. That might add up to a few £100s. We've also got a broker fee, so most mortgage brokers charge a fee. We charge £500 normally, so that needs to be factored in as well. And then in terms of basic costs, you've got things like removals or, you know, hiring a van, that sort of thing. That might be, you know, £100 for a day to £1,000 if you want your whole house moving by someone else. So that's the basics of the fees that are involved. So we need a few £1,000s on top of your deposit. Now we will always go through that with you because that is bespoke to you and it depends on the value of the house, the stamp duty and things. So it's not one figure for all. It very much depends on your situation and the value of the house that you're buying. Okay, so last up, the big one, how much can I borrow? Completely depends on your situation. So we are going to look at things like your income and your outgoing. So when I talk about income, you know, you're employed, you're self-employed, you've got your own company. Let's assume you're employed for a second, you've got your salary. If you've got overtime and shift allowances, you know, bonus, commission, that sort of thing on top, so that variable income. Different lenders use different amounts of that variable income, so who we go to will have a big impact on how much you can borrow, so we need to go to the right lenders. Then we're going to look at things like your outgoings. You know, you've got loans, debts, credit cards, do you have children or any other commitments, any other properties in the background. So we're going to look at all of your income and all of your outgoings. There's not one rule that fits everyone. I mean, some people say, you know, 4.5 times income, and yes, that can be true. You know, if you've got a nice straightforward income and hardly anything in terms of, you know, debts or other commitments, 4.5, even a little bit more maybe, times your income, your joint income, that's about where you'll be. But if you've got more complications in there than that, then you're going to need more of a bespoke look at how much you can borrow. So that comes as part of our service, as it will with lots of other mortgage brokers as well. But it's very important to do that before you go and start looking at properties, as I said a minute ago. Okay, so that sums up our top 8 questions of the moment. We'll come back and do some more of these soon because these questions change all the time. Things are changing all the time. If you want a little bit more information about your position and where you are, how close you are to buying your first house, or you know what the fees and the costs are going to be, or how much you can borrow, please feel free to get in touch. There's a link in the description below to the website. You can go and check that out. There's a link on there to book an appointment as well, straight in our diaries. First appointment is completely free. We only charge a fee once we do a full mortgage application for you. So hopefully we'll speak to you very soon. If not, I'll see you on the next video. Take care.